What's up, guys? And that's from the Strong Family Money Show here with another episode of Strong Family Money Business 101. Today we're going to talk about inflation. What is it? And what you can do to stay, I won't say ahead of it, but not too far behind it, right? So inflation is a general increase in prices and fall in the purchasing power of money. That's the official definition. So over time, there's always a general, inflation in general, right? What we're talking about here is some inflation caused by economic reasons that will cause your money to be worth less, right? So the way they do it is most people calculate for purposes of explaining it to the public. It's always a standard. You have a basket full of items, right? How much does it cost to buy that basket full of items? Or they sometimes, from the question is, you have $100, right? In this year, $100 and they have a standard set of things, right? Milk, eggs, cheese, blah, 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 right? So $100 got you this stuff, right? Last year, right? $100 this year gets you less of the stuff from the previous year. And the reason you use things is because that's what you're going to do with your money. You're going to go buy things, right? You want to take your money to the store, right? You have $100, right? You want to buy eggs, cheese, and milk, right? How much of that can you buy? Next year, if you go to the store with $100, you're probably going to be able to afford less eggs, milk, and cheese, and that's inflation, right? There's always going to be that trend, but there are other factors that then determine how steep that trend is, right? So the higher the inflation is, the less there's a chance that the savers will make any money, right? So if you're a saver, if you just take your money and put it away, if there's some sort of increased inflation that happens, you're really not doing yourself any service by just saving the money, right? Because you're saving the money is losing value, right? So, as the contrary, assets during inflation then increase in value, right? So if this year you buy something that cost you $100 to invest in, right? The next year it takes more money to buy that thing, so your asset then increased in value. And what you're hoping is that when you then go and turn that asset in, that the inflation deflation curves, it's on the other side, so then you sell it for more, right? But your money is worth more at the end, right? So it can be caused by a few ways. Some is demand pull inflation, so where the demand outpaces the supply, or it's cost push, right? So the cost to make something increases, so labor or raw material increases, so then they have to charge more for that item, and then your nothing to do with anything other than it just costs more to do business, so then it costs more for you to buy the thing, so your dollar is then worth less. So inflation is over time, money is worth less because it costs more to do business, or there's an oversupply of printed money in the economy, so there's just more, so everything will cost more to purchase because there's more currency out there in the public. So what can you do to beat probably isn't the right term to use, right? To slow down or keep more money in your pocket or get the more value out of your money is probably the best way to say it. So you can invest in the stock market. It's an asset, right? So all these things I'm going to mention are assets that you can buy to stave off inflation. So invest in the stock market long term, not a day trader. You're not trying to make a quick buck, right? Most likely you'd be better off trading the exchange funds, so like the NASDAQ, the S&P 500, right, whatever. So you want to just put into an exchange fund and throw it in there, stick it in there, and over time it'll increase in value. You want to invest in bonds, so invest in bonds. Over time you have a guaranteed return. It is a smaller return, but there's a maturity date at the end. On this date I'm going to get more money than when I put in. You want to buy real estate. Real estate is, a large majority of the millionaires or rich people out there are rich because of real estate, right? So they invest in one property, then two, then four. So they're always investing their money and having their money work for them. Or you can invest in a CD, right? So it's kind of like a high-yielding, long-term savings account fund. So take your money, don't save it. Inflation will make it worth less, right? Take your money, invest it, so that way you have a chance to make more over the long run, inflation or not, right? Then you have there's more risk, but you have a chance of making more money over the long run. Anyway, if you have any questions, let me know. So that's this edition of the Strong Family Money Show, Business 101. Thanks a lot, and I will talk to you guys next time.